Good morning, everybody. Thanks very much for joining us today. Very interesting discussion around logistics, and we're particularly looking in this session at logistics in transition, looking at distribution centres, urban logistics, light industrial, and looking at some of those key segments of the market, and also looking particularly at the future and what that means for real estate. Fantastic panel for us today. We've got Edward Bates of Stam Europe, Sean Culey, who I'm sure many of you know as a business transformation expert. We've got Mark Holz from Caustic Capital, Nick Preston from Tritax Eurobox, and Daniel Walsh from CMS. So a really super panel. At the moment, you can ask questions, you can log in, you can really make comments about anything, and I'll pick those up and make sure we share those with the panel. Just in case you don't know who we are, I'm Richard Betts from Real Asset Media. We run events, newsletters, magazines, TV, and also actually the Senior Housing and Healthcare Association. A number of things that we do here all on the screen. Do feel free to check those out later. We've been running a lot of new initiatives since the health crisis kicked in, real cast, special reports, and also moving all of these sessions online. And we've also created realx.global as a virtual community and also area for a virtual exhibition and to host these events. So if you're watching it online on Zoom, or if you're watching it in RealX Global, welcome to all of you from wherever you are in the world. I just wanted to introduce the panel now. So speakers, if you could put on your cameras and microphones, that would be great. As I said, we've got an absolutely super panel here. Let's start. Let's start with you, Sean. Just give a kind of, I suppose, brief introduction of yourself and what you do.
I wear many hats. I think I'm sort of well known for sort of commentating on near futurist movement of disruptive technology. So I'm sort of renowned for being sort of a near futurist who writes and comments on, the impact of disruptive technology on supply chains and on business. I'm the author of the book Transition Point. Also a visiting fellow at Cranfield University, where I specialise in supply chain management, specifically the implications of disruptive technology on supply chain management. And I guess to earn a living, I spend my time working as a advisor in business transformation. So I help companies through doing masterclasses or through, sort of personal consulting, working with them to understand how to use these different technologies and to think about them as sort of technological accelerators in order to revitalize their business models.
Great, thanks very much. Nick.
Hi everybody, good afternoon. I'm Nick Preston from Tritax Eurobox. I'm the fund manager of the company. We are a London Stock Exchange listed company, and our mantra is to invest in large format logistics units, let to good tenants, strong locations across Western European geographies. We've built up over the last 2.5 years since IPO a portfolio of over 820 million euros worth of assets in 12 separate assets spanning 6 countries. That's a brief introduction from me. Thank you, Richard.
Great, thanks very much. Edward.
So Edward Bates, I run the Stam Europe business here in France. We're a France-focused investment and asset management firm. We manage currently about 2 billion euros of real estate assets in France, and that across 3 major themes, which are offices, logistics, and residential. And we manage as well different types of capital for those 3 asset classes. So we manage long-term capital, core capital, as well as short-term opportunistic capital in different strategies. We're a team of 26 people, and we were one of the forefronts of starting the specific logistics business here in France about 6 years ago.
Super, thanks very much, Edward. Daniel.
I'm Dan Walsh. I'm a partner in CMS's real estate group. I'm based in the London office, have a particular focus on development logistics projects, and have acted for a number of developer clients and some of the largest logistics schemes in the UK over the past 15 years. In terms of our business, CMS is the 5th largest law firm in the world, with a huge global footprint across 75 offices in 43 countries. We've also got the largest real estate team in Europe, with more than 800 lawyers offering a full range of legal services. Delighted to be here and look forward to hearing everybody's views.
Great, thanks very much, Dan. And Mark.
My name is Mark Holz. I'm the group head of research for CORESTATE Capital, working out of Frankfurt and Munich. Caustic Capital is a leading European provider of integrated investment solutions. We've got 28 billion of assets under management. So we're basically a one-stop shop for all sorts of investment solutions. It's fund management, it's investment management, asset management. We've got our own big property management arm. We've got our own operational side. And we follow a pan-European investment strategy, invest in all types of real estate, from residential to all sorts of commercial real estate, including, of course, office, retail, and logistics and light industrial as we speak today.
Let's just start off quickly with a sort of more general point, I guess. Let's start with you, Nick. I suppose, how have you seen the health crisis, over 2020, I suppose, influencing and potentially changing the market for logistics?
Well, thank you, Richard, and thank you, Mark, that interesting presentation. And there's a lot of points in there that I agree with. And I think some of the points that you were saying, Mark, actually answering your question, Richard, in terms of the way that the our occupiers and the market generally has been dealing with this. I think the first few months were characterized by sort of damage limitation, operational focus by occupiers in terms of making sure that their businesses were able to keep going, that their staff were safe, and understanding the situation. I mean, if we cast our minds back to March, April time earlier this year, the world was a lot more uncertain than it is now. Now, and I think post the summer, we have seen operators really start to move forward based on the understanding that they have gained over the last 6 months or so in terms of how we can deal with the pandemic, the actual, the way that operations can work. And we're starting to see decisions being made in terms of leasing decisions for expansion, and how operations are sort of coagulating really into the new world order. And as Mark was saying, that the two key areas here, really there's the e-commerce piece, and his slides showed that very neatly, that we've seen a real bounce up in online spending. We've seen online retailers, their facilities have been working flat out and really looking to seize on this opportunity. And so we've seen expansion plans brought forward, and we've seen that retailers accelerating store closures and growing the online piece to really help capture this one-off. They see this spike up and coming back down again. They obviously want to limit the bounce down again to capture as much of this online piece as possible. And I'm also not here just talking about the pure online play, but really the omni-channel retailers, who I think are really, that's the sort of the majority of the future model will be to have a reduced, for retailers to have a reduced store footprint in key locations, and that they will have a much better, highly automated and technologically advanced distribution system run out of a series of logistics properties, whether those be the very large ones that we invest in, whether it be the smaller urban ones that act as that final step into people's homes, or a blend of the two. And I think that we'll start to see that really evolve. And then the other point, in terms of answering your question, what are the other impacts we're seeing, and again, Mark talked about this, is that companies have been based for a long time on a just-in-time supply chain model, and they're now moving this to a just-in-case. And what that actually means, and we were hearing this actually earlier this week from some of our German contacts, that companies are looking to build up inventory closer to the customer. And that's not just retailers, that's manufacturers, it's the automotive industry, it's a wide range of different occupiers. They're looking to hold higher stock levels closer to their customers or their production facilities to ensure that they can weather another storm such as the one we saw in the first half of the year, when a lot of companies were frankly, really squeaking at the edges here in terms of being able to continue their operations because their supply chains were a little bit fragile. And so they're looking to resolve that for the future by holding more stock closer. And all of this, in terms of all of this, and Mark's slide illustrated this from the e-commerce side, it needs more logistics space close to populations where the customers are, where the populations are. And so I think those are going to be the key takeaways. And I think that, and again, I agree with most of what Mark says. I think it can safely be said that the future, looking ahead, we've got the future is very bright in terms of we've got a long way to go here in terms of how the whole sort of logistics industry supply chain will continue to develop, because as we know, a lot of these operators don't move particularly quickly. They have huge operations. They can't turn on a sixpence and do these things really, really quickly. So I think we have a long way to travel in terms of consolidation and improvement in supply chains, and high levels of automation to accommodate all of the things that Mark mentioned at the end in terms of all the drones, airships and driverless vehicles, and et cetera, et cetera. But ultimately, that somewhere has got to have stored all of the stuff, if you want to call it that, that's going to be distributed out there. And so from a logistics perspective, I say that there's a very broad and bright future across the piece.
Okay, good. And thanks very much to everybody for your questions that you're sending in. We're monitoring those across all the platforms that we're streaming on, so therefore we'll be picking those up and asking them. I'm going to come to yours shortly, George, in terms of, thanks George Coleman for this, in terms of the key drivers for light industrial, and also the role of computer vision-based AI in warehouse automation from Yelena. Thanks for that. But I just wanted to pick up a little bit from you, Sean. Obviously, Mark highlighted a couple of the things there in terms of new areas that are coming through. I guess, what are you seeing? And also, to a certain degree, are you seeing changes in terms of supply chains and those kinds of things? I mean, Nick mentioned that just in time was being replaced in a way. Are those things that you're seeing as well?
Yeah, no, I think that's very fair. So resilience is kind of the word that's used a lot in supply chain management right now, and I think the leaning of the supply chain in what I call it. I'll go back a little bit. We're currently in the upswing stage of the sixth wave of creative disruption. So I talk about this quite a bit in my book. And this is a time which is incredibly disruptive. And so it's been planned for some time that we were going to go through this. And what COVID has effectively done is accelerated that trend enormously. And it's brought forward a lot of technologies that were going through this sort of hype cycle and allowed them to cross the chasm a lot sooner. Now, the leaning of the supply chain happened in the downswing of the previous wave, because around the downswing times, you find a lot of focuses on efficiencies and making money from money effectively. Change is relatively linear, and actually a lot of the organizations were looking at offshoring manufacturing places like China, where they could reduce labor costs, that sort of thing. In the upswing period where we find ourselves right now, we're in the world of huge amounts of change. As Mark said, probably the most disruptive period humanity's been through. Most people haven't experienced this before, so it's caught a lot of people really short. They were struggling with the rate of change before COVID, and they're really struggling now because it's accelerated it, and it's effectively provided to be sort of what I call rocket fuel for the automation revolution. Now, to protect yourselves, like in any supply chain, to protect your supply chain, what you normally do is you buffer for uncertainty. And I think the point that Nick was making there, which was, focusing on resilience, having a resilient supply chain, which is not necessarily the cheapest supply chain, but it's certainly the one that's not going to leave you exposed when you have variances in demand that are far beyond what you can plan. And what we're in at this moment in time is a time where, planning is virtually impossible for a number of reasons, one of which is, the sheer rate of change. And the other reason is, as supply chains have evolved, number of different data points that they're receiving data from in order to be able to create this plan has grown so quickly and so exponentially that effectively humans are unable to make sense of it. So we're looking to cognitive computing, AI-driven planning systems in order to be able to identify where to put inventory and at what level, and also where to position certain infrastructure elements. So the supply chain network design itself. And I think that's what a lot of companies are doing. The sort of leaders in that space are your Unilevers and your J&Js, obviously your Amazons. Those that are able to use this technology in order to strategically determine, what inventory to place and where. And if you can't do that, then I think the only other alternative you've got is to buffer for uncertainty, and that's exactly the point I think that Nick was making, and I think he's absolutely correct on that.
And just the point from Yelena there is, how do you see the role of computer vision-based AI in warehouse automation?
Well, that's definitely taken off. There's been experimented with for some time, and certainly things like from vision picking, as they call them, where you have augmented reality glasses that would enable humans to basically walk down the aisles, and the AR glasses would guide you to the particular inventory that you want, all the way through to drones that do the inventory counting. So when you've got double deep racking or high racking, the drones would effectively do the inventory counting, which was always a big issue in warehouses, always a big issue in supply chain management, was having a high level of integrity of exactly what inventory you had and where. But I think the Ocado example was mentioned in Mark's presentation, but these ASRS systems, the ability to effectively leverage much more of the warehouse space than they have previously by effectively taking the humans out of the loop. So by being able to use every foot of space, both vertically as well as horizontally, and not have to leave spaces for humans to walk up and down, but actually to have this sort of cuboid model, has enabled a lot of companies to pack a lot more inventory into a lot smaller spaces. And that certainly is going to be very important when we move towards things like urban logistics.
Okay, good. I wanted to pick up with you, Edward, just the point from George Coleman there, which were about the key drivers of the light industrial subsector. Is it more resilient? I mean, what's your sense of, looking at some of those segments, how do you see that light industrial side?
Well, we see it as more resilient from an investment standpoint. We also see it today as an opportunity to get a little bit more arbitrage on investment yields. So where large big box warehouses and the big distribution units have been a focus of most investors over the past couple of years, and you've seen, as Mark pointed out, the drastic drop in prime yields on those types of assets, we've tried to focus most recently anyway on some of this light industrial activity space here in France, where we see a better yield play in terms of that cash arbitrage play, which is more of an investment focus, I guess. As far as the resilience in terms of the market, it's more of a demand real estate question. And from that, our experience is that these light industrial activity spaces tend to stay pretty well occupied even through economic downturns. So as we go into headwinds over the next, let's say, 18 to 24 months, where these economies, or at least the French economy, is going to take a hit from some of the problems linked to COVID, and once the government stops funding some of the programs that are helping these companies survive today, we think that light industrial activity space will be more resilient. We think it's more backbone businesses, less consumer consumption oriented, and as far as urban last mile logistics, which we're also investing in, we think we'll see an uptick, quite frankly, because of the things Mark pointed out and also what Nick mentioned, which is as e-commerce expands, and even though the economies will be slowing down in terms of consumption, we think people shifting, or we hope anyway, we're taking a view anyway on this, is that as people shift to e-commerce, it will offset some of the demand that's dropped because of the economic downturn.
Okay, good. I just wanted to pick up with you, Dan. Obviously, a key component of this is, we're talking about the returns on different sectors, but a key component of that is also what's the capital looking for? I mean, obviously, there's a lot of discussion around capital moving away from, whether it's leisure and hotels, but specifically retail, and into logistics. I suppose, what are you seeing in terms of that capital demand?
I think we're seeing a mixture, to be quite honest. I think from the investor side, you're seeing a huge demand for logistics space right now, simply because the logistics sector at the moment offers some of the most sustainable rental growth in the UK real estate market at the moment. Lease terms are attractive to investors because they've got long terms, fixed rental uplifts, and minimal management. So we're seeing there quite attractive propositions to pension funds and other institutional investors, which are pulling out of the retail and hospitality sectors and buying logistics assets, which are let on a long-term basis to supermarkets and 3PLs. But I think as a result of the demand for space, we're also seeing lots more logistics assets coming onto the market as developers and logistics companies look to capitalize on the demand. And you'll have seen recently in the press, Mount Park has recently sold 11 ultra prime assets for 550 million euros. Blackstone has also recently acquired a portfolio of 22 assets from Prologis for 473 million pounds. And then I think we're also seeing the fierce competition for the last mile logistics, as Nick and Mark had mentioned, which is needed to service that growth in e-commerce. And most recently, we've seen SEGRO has purchased 2 significant last mile sites just this year, when they acquired Perivale Park in West London for £202 million and Electra Park in Canning Town for 133 million. So, and in both cases, they were significantly more than the guide prices. So we're seeing that fierce competition is really driving those prices up to secure positions in those key locations. And this is becoming a problem for some companies because they don't have the financial resources to compete with to buy that sort of product.
Yeah, I think that's interesting. And Nick, from your point of view, obviously, Tritax, big operator in the UK, but also in Europe. Are you finding that capital is beginning to look kind of, more than just broad logistics, but is looking at specifically where they would want to place that capital? So, for example, from your perspective, they would be targeting Tritax as a listed entity because they wanted to access that sort of larger distribution areas. What are you saying?
Well, we obviously, from a Tritax perspective, our principal business is in the listed space, and there is good interest from the listed investors. It's usually the way, but there's also good interest for investors in the unlisted space, whether that be direct investment or through unlisted funds. There's plenty of demand for that in the industrial logistics space too. It's somewhat the way of life that the two are very separate, and that the type of investors that I would deal with from an equity perspective, while they may be the same headline names, would be very, very different teams. So we're actually seeing across all sort of entry points, if you like, in the capital markets, demand for the logistics and industrial generally space. And I think that it's as Dan was just saying, I had it described the other day as TINA. There is no alternative. The retail sector is in a frankly desperate place. Nobody really is frankly uninvestable. The office sector, the jury is still out in terms of where that's going to land. Yes, the densities and occupation of working from home, and so. But for all the reasons we've been discussing, the logistics and industrial sector has got the wind behind it, and that wind is picking up. That's why we're seeing across all different sort of entry points in our markets, sort of very strong investment demand.
Richard, I might just add as well that here in France anyway, one of the things we're seeing is that, and I'm exaggerating a little bit, is that as you shift, let's say, from retail or offices into the logistics space as an investor, you're creating, let's say, a 50 billion euro demand for a product that only has about 3 or 4 billion of transaction volume every year. So you're seeing this huge weight of capital come into a market space that is very small. And so that's why the yields are coming down, and competition is extremely competitive in terms of pricing. So what we're starting to see, and actually what we're playing with as a strategy here in France, is to start buying different types of assets within this, industrial space or this logistics space. And so we've started buying transportation assets, for example. And this, we think, will become a new institutional class product within the logistics, let's call it, realm, where you actually own and lease back transportation assets for investors to then expand, let's say, the universe of what we consider logistics investments today.
Interesting. I'm going to come to that point in a second, actually, with Sean. Mark, I just wanted to pick up a question that came in from another Mark, actually, Mark Didavi, just to say, do you see any potential risk of oversupply of logistics assets in certain European markets? I mean, obviously, the discussion that we're having suggests that there's going to be there's not going to be oversupply, but what's your sense of that? Is there oversupply in any specific niches or sectors across Europe?
I think talking about core Europe, the western part, France, Germany, Benelux, there's a low risk of an oversupply situation. Land is scarce, land is expensive, and actually the public side don't want developers to reuse new land too often. So land is becoming a scarcer commodity. But looking at maybe the Eastern European side a little more, where laws are a little more lax, there has been a huge development pipeline for many years, looking at the Czech Republic or Poland or something, and a lot of that being built at a speculative end. So if the global economy, the European economy was really to tank, yes, there would potentially be a risk of an oversupply situation there. But generally in core Europe, that risk is relatively limited.
Okay, good. Sean, I mean, Edward there mentioned about that sort of searching for new potential areas for logistics, but also a lot of mentions already been around the retail side. I mean, you look at disruption more generally. So I suppose, how are you seeing that disruption in retail play into logistics? And also, does that lead you to think in terms of the real estate sector, particularly anything in terms of the types of spaces that may be more, I suppose, may come into play now, like Edward was talking about, for transportation, for example?
Yeah, I think so. I mean, a number of the research papers I've written recently have sort of discussed that, we're increasingly moving towards sort of, hyper scale size fulfillment centers, things that, Amazon sort of bought, and the repurposing of things like the 20th century shopping malls that are ultimately been emptied out now, and repurposing them as, large scale fulfillment warehouses. But obviously the positions where they are is not people are not going to travel to them. The inventory has to travel to the people, and the way that's going to do that is probably going to be through a two-step model where you replenish the hyperscale logistics center, and then obviously we have to move the goods to more urban-based or suburban-based fulfillment centers in order to then do the last mile delivery. And that could be to someone's house, or it could be to a smart locker, or to strategic decanting points such as post offices, those sorts of things. The mention around autonomous vehicles, I think, is very interesting, because it's increasingly going to accentuate the sort of move to transportation as a service. One of the things I've talked about in Transition Point is, as people will increasingly move on from just sort of the simple Uber model of hiring a driver, but actually hiring a transportation as a service as and when we need it, rather than invest heavily in assets. And I think that's as applicable to the logistics space as it is to the normal sort of consumer transportation space. I think, again, in this period of rapid change, people are nervous about making large-scale investments in a time of great transition, and things like being able to acquire, transportation as a service is going to be incredibly attractive to people who don't want to make big bets at this point in time, because they're really so unsure about exactly what's going to happen. So I think, yes, I think we are going to see the ability to create fleets of vehicles that could allow people to, other logistics companies or retailers to acquire them as they need them, the ability to create space as they need them, be that the more urban space or the sort of hyperscale space. And this will accentuate, I think, as we move forward over the next 5 years. One of the things I think is quite interesting is obviously the Great Reset and the sort of Davos sort of driven agenda to, help countries achieve more sort of sustainable targets, especially around sort of energy. And I think that will play into the decisions. There's going to be big penalties for heavy diesel trucks, for example, and companies are going to be heavily incentivized either through penalties or through incentives to move away from some of the older style transportations. And rather than to make big investments in new style, I think they will look to see if they can just acquire them and, as I said, as a service, as and when they need them.
Good. I want to pick up on a couple of things in terms of some of the challenges as well at the moment. I mean, Dan, let's look at the UK market. What are you seeing at the moment in, I suppose, as the challenges for the logistics sector? And then we'll also pick that up in terms of Germany and France as well.
I think fundamentally there's a lack of grade aid space, particularly in the northwest of the UK, and also a lack of available land for logistics use within core locations, both within urban areas and out of town. And I think that will continue to be a challenge, but the availability of new sites will ultimately depend greatly on the approach of the government and planning authorities, both in terms of planning restrictions and greenbelt requirements. But I think that this sector will continue to be the focus of a lot of political attention, a result of the need to balancing conflicting interests from logistics development. We've seen the prioritisation of residential development over industrial use, which has been a key concern for the logistics sector for a number of years now. So I think you will continue to see that as a challenge, and we can perhaps talk about some of the potential solutions to that around sort of multi-level occupation, redeveloping secondary stock. But I think in terms of other challenges, pricing as well. As we've all just heard, we're seeing more capital being pumped into logistics as a result of investors pulling out of other sectors. But as Nick has said, this is increasing competition in the logistics sector, and with it bringing new players with a mandate to place huge amounts of capital. And so we're seeing, as I mentioned before, fierce competition for prime assets, particularly for those city centre urban logistics sites, which is where we've seen prices escalating. But I suppose with the other point is with all of these developments that we've seen coming up recently, where do you get the workers to service these huge logistics park? Are we relying on automation, or can we actually resource these massive fulfillment centres across the UK? And I think that's going to be a big challenge for the UK.
Okay, good. I want to pick up a little bit on France, but also, Edward, I've just had somebody say, and thanks for that comment, it's great. Please can we explain a bit more in detail about transportation assets? Interesting point made, and would be great to expand on it further. So that gives you free rein there, Edward, to pick up both a little bit, I suppose, on what you're seeing in terms of challenges in the French market, but also particularly that asset.
Okay, so on the first question, what we consider or what we call transportation assets are the sites which transportation companies use around the country or around cities to actually store their trucks overnight. They have garages there, they have petrol stations, they have their technical people that work on the trucks and things like this. And typically it's a very fragmented market, and as they own their real estate, they're thinking of, and what we're doing is we're approaching them about crystallizing some of that real estate into an investment product. So that's what we call transportation, I guess, assets in France. I hope that's clear. As far as challenges for the logistics and, I guess, light industrial market here in France, it's a bit the same thing as Dan said. I think from an investment perspective, it's we're lacking product, because of the increasing demand is making that a pricier, difficult situation to work with. So from an investment perspective, we're lacking product clearly, and creating new product is only getting harder. So if you own something today, it's only getting more valuable, is my view. We are, like Dan said, in France, we're having new environmental laws about developing greenfield lands, where it's going to be very similar to Italy's regulations today, where if you don't have an existing site, which is industrial or commercial or developed, you're not going to be able to turn a greenfield site into a logistics site in the future. We already have a very difficult administrative process in France, and getting permits, not only construction permits, which are quite frankly practically easy to do. The hard part in France is getting the authorizations to actually operate within those buildings, and that's very political, and it's also a very long process. So most developers, it takes almost 5 to 10 years to get permitting approved for a project here in France. So again, I think those are the challenges from the investment side. And then from an occupational side, I would say, we're not oversupplied. And I would go to a more, sub-market approach, and we take a very bottom-up approach to that issue in terms of supply. Because if you look at the Lille market today in France, we probably would say that's oversupplied or going to be oversupplied. If you look at the Lyon market or the Marseille market, or even the Paris market, supply in land is so limited that we're undersupplied. So, I think you have to look at market by market, but overall we are undersupplied in terms of the demand out there today.
I mean, we've got an interesting one in terms of looking at market by market from Ikapara. What potential do you think logistics has in the sub-Saharan Africa, where technology is not so sophisticated, especially in the coronavirus pandemic era? Interesting question. Does anybody have an answer?
We're not investing in Africa yet.
I like the yet though, Edward. That's good. Sean, is there anything in terms of, I suppose, what's happening, looking at some of those future trends that might lead one to believe that there are going to be more opportunities, I suppose, looking at areas like Africa, sub-Saharan Africa, those kind of areas?
Yeah, I think so. I mean, I do a lot of work with Africa, interestingly enough. I've just done a number of transformation projects in Nigeria, currently working with the United Nations out in Kenya and East Africa as well. And it's a question that gets raised a lot. And, as I explain in my book, Transition Point, this is a time of, opportunity and threat. And I think the opportunity for Africa is the ability to look at these new wave of disruptive technologies and say, can it help us to leapfrog, in some respects, the traditional journey that maybe the West has had to go through. So the West has had to lay down a series of infrastructures and to get to this point, and it's now looking at these new technologies. But knowing that most companies and most governments have made heavy investments in the technologies of the past. Now, Africa, for example, in a lot of cases, hasn't done that. So it presents an opportunity to use things, for example, like drones is a good example of something that was mentioned earlier. In Africa at the moment, they're leading the way in terms of drone usage, because they're using it to get medicines and to get treatments out to people in more remote areas. They don't have the same sort of legislation issues, so they're able to use it to get across hostile terrains and sort of things like that. However, I think it's, I'd be remiss to mention that actually, there is also a number of constraints. One of the fact that they haven't invested heavily in a lot of these, older infrastructures is that always going to be to some extent a liability if those new technologies require that existing infrastructure. So, example I use quite often is we can have autonomous vehicles, for example, that would navigate quite easily around the highways of the United States or the UK or across Europe. But would really struggle on in Africa, where not only are the roads in a lot of cases particularly incomplete or in very poor condition, but actually the rules of the road aren't there either. People, from everything from sort of people on putt-putts to just driving up on the path and behaving completely randomly. That's going to be massively prohibitive to the development of any kind of automated vehicle that's going to be able to use that infrastructure. So I think there's opportunities to overcome some of the constraints through some of this user technology and to use it much more strategically. And they are doing that. I mean, M-Pesa, for example, is a mobile banking system that is widely used across Kenya, and they're probably the biggest users of mobile banking around the world. In an environment where they didn't have a traditional banking structure. So they completely circumvented, banks, checks, all the old sort of 20th century banking infrastructure and gone straight into sort of 21st century. And, obviously smartphones and apps and digital technologies is enabling to do them. But if it's something that kind of requires 20th century infrastructure, if it requires, stable roads and rules to how to operate those rules, then I think it is obviously going to be a constraint as well.
Okay, good. I wanted, because we've got around just under 10 minutes left, so I wanted to pick up a little bit on some of the key points around the market. I guess, what are we seeing, and anybody can pick this up, in terms of valuations, in terms of yields? There was particularly something actually from Carlo came in. Carlo, thank you for that question, which is really around what we see in terms of yields. What could happen if there's a lack of logistics warehouses? Demand will increase, new products will take time to prepare. What sort of impact is that going to have? So who wants to pick up just on those kind of yield ones? Nick?
I start off on that. I think that we are about to see about to see yields compress. Yields have been compressing in the logistics sector for nearly 10 years now across Europe. That's virtually all markets, and Mark showed the slide earlier. I think that we will continue to see this for the reasons we have all been talking about. It is plainly obvious that the supply side, the demand side are all in favour of the owners, and investors are looking at the sector unanimously. Ed's point about the amount of capital chasing a relatively small number of assets, it only leads to one thing, and yields will harden, and we're starting to see this already. And so I think there's only one way of travel here for the foreseeable future. And I think that's across most markets. We've already seen a sort of narrowing of yields across various markets. And despite all the things we've been saying about oversupply in certain markets, and I do agree with that, I think some markets will see oversupply. Developers will get over enthusiastic, but ultimately you've got to have the occupiers. You've got to look at what the occupiers want. It all comes back to the same thing. You've got to have the population centres for the customers and for the workforce. You've got to have the infrastructure to get things in and out. As soon as you start developing outside those parameters, you will end up with an oversupply if people do this speculatively. So what we're talking about here is these prime markets around the hubs. I agree with what Ed was saying about those markets in France as very, very good examples. And those are the type of markets that will perform well, continue to perform well. We see that in Germany as well. We see that in the Netherlands and in Belgium too. Those markets, there's no oversupply in these core markets, and therefore the performance is looking good.
And Edward, in terms of the valuation side, because obviously there's also a disparity with people talking around repurposing retail and various things, but disparity between the valuations and the rents viable. I suppose, how do you see that valuation topic at the moment?
Well, as far as logistics go, I think what Nick was saying is that we'll see more compression in yields, and that's also in correlation historically with offices. So as core offices, and it's certainly the case in Paris, CBD, if you've got a core office in the CBD in Paris today, pre-COVID, you were probably around 3% with a good tenant and a long-term lease. And today you're probably closer to 2.5%. So there's actually been a decrease, in the yield, the prime yield in offices. And the same thing's happening in logistics. So if you're looking for 100 bips spread between offices and logistics, I would see logistics spreads coming to France down closer to 3.5%, in terms of prime yields where they're today at 3.8 or 4%. So I think from a valuation point, I don't think you're having any discussions or difficulties as an owner today to revalue or increase the value of your logistics real estate. I think you're struggling if you're owning offices or retail.
Okay, good. There's an interesting point come in from Yelena, actually, and one I wanted to pick up as well, which was, how do we see sustainability fitting in with these? There's a lot of sustainability pledges from big companies, as well as the logistics providers. How might this affect the logistics sector in the next sort of 10 to 15 years? Mark, did you, or anybody
already? Sorry, in France, I'll jump in real quick. We're seeing it already in France, just because any new buildings that are being built or are being required to be built in France will have to have solar panels on their roofs, for example. It's a bit of an aberration in some places like Lille, where there's not a lot of sun year round, but we'll get through that bit, I think, as it works itself out. But there are regulations coming into play that are going to force developers and owners to put, solar panels on their roofs. And I think as a company and as part of the CORESTATE group as well, within the group, we are looking at ways to digitalize, to put in LED lighting, to try and monitor our consumption of energies and stuff on a digital basis and a platform to be able to monitor those. And if things go out of whack, then we notify our tenants and we notify electric companies and things like this. So we're implementing some of that stuff already, despite regulations.
Okay, good. Mark, did you want to pick that up?
Well, yeah, basically, I totally agree. Of course. So I think it's several sides playing into this. You've got as a developer, as an owner, you're obliged from the governmental side to do something to be better. I think investors, so the money wants it as well. The more money wants ESG conform investments, the more it will of course happen. And the last side, the tenants, want it as well. I think there's a lot of research and development going on in ESG conscious conform distribution vehicles, being electric vehicles, or even getting I don't know back to bikes in the cities. So there's I think within the logistics industry quite a few things happening to foster to be better in terms of ESG. So I think it is happening already, and it is a thing that will stay in the market for the foreseeable future. It will be an important part of the market.
Okay, we've got a quick question as well here from Carlo, which I wanted to tackle, which is, and this happens to be in Portugal, Lisbon, but I think we can use this as a general, a pipeline of 35,000 square meters of logistics warehouses to be developed near Lisbon in this particular case, but near a city in different locations. Question is, should it be, what sort of project solution should they be looking for? Small to mid warehouses, or building bigger units? Nick, you're going to say bigger units, would be my guess, but
I'm not necessarily. I think it just depends entirely on what the demand's like in the market, and what the occupiers want. We always need to remember that it's all about the occupiers in everything that we do, because if we haven't got a tenant, we haven't got an income stream, we haven't got an investment. So it just depends, I think, to Carlo as to where that demand is now. If that's a development that's coming out of the ground now, it could be smaller, it could be a single property. Just depends.
Okay, good. There were a couple of short things I just wanted to pick up. I mean, Sean, in terms of repositioning some of the retail, I know, and if anybody missed Sean's presentation at RealX back in September, do look that up. We'll put that into the chat so that people can also revisit that. But interesting, one of those areas which was about repositioning some of the retail assets, but also things like parking. So in terms of the real estate side, Sean, what do you think are the potential opportunities there?
I think there's quite a lot. I mean, we talked a bit about large scale and warehousing space, moving into more urban logistics. We're seeing a rebirth of retail in some respects, but it's a different retail that we had previously. Companies are looking at how do we get inventory into the spaces where people live, so the urban spaces, in order to be able to satisfy this growing e-commerce market at an affordable price range. One of the things that certain companies are looking at is some of the spaces that were part of the sort of 20th and early 21st century shopping revolution, which required the person to go to the shops and usually by car, and which is now being transformed to the shop coming to you much more from an e-commerce perspective, but also a revitalization of the high street itself. A lot of high streets are looking very tired. A lot of the brands are being really hit over the last sort of decade, and COVID has been the death belts for them, really. But what we're seeing is sort of, I think, a hybrid model of bringing together sort of retail and warehousing and logistics into a combined sort of offering. We're seeing, for example, companies like Fabric, that were previously called Common Sense Robotics, looking across the whole of the United States at the amount of unused car parking spaces, and it's in the billions upon billions of dollars worth of unused car parking spaces, and specifically things that are very unattractive for anything else, like underground car parks, and being able to say, well, that space isn't very attractive. There's somewhere to live, isn't very attractive as a sort of shopping centre, but it's been developed specifically to hold motor vehicles that actually people aren't going to be owning as an asset and needing to park in the same way moving forwards, because they're going to be using them, just purely as an access-based service, and the utilisation of those access services will go up because people will just get in, go to the shopping centre and come out. So what we're seeing is, I think, positioning of logistics more into the centre, using things like underground car parks that, as I said, are cheap, they're subterranean, they're perfectly positioned in order to satisfy an urban market, and they also don't consume the sort of above surface real estate. So the number of propositions around sort of combining the sort of logistics underground, which can service shops that are above ground, directly above them particularly, and then above that have office space or entertainment space or restaurants, these sorts of things, and sort of have this combined use mindset of saying, look, the days of people just going to a high street to just ponder around shops is kind of gone now. We are seeing an increasing pedestrianisation as vehicles move from being something that you own and need to therefore park to something that you just use as an asset base. And therefore, we're seeing this sort of revitalisation, I think, of the high street, where it becomes much more multi-purpose, much more pedestrian-friendly, much more experience-based. And in order to service the demands of those people, I think we will start seeing, real intelligent thought processes around, repurposing a lot of this sort of old 20th century technology, like car parking space, of which, there is a lot in urban centres right now.
Okay,
one of the things, if I may point out, one of the things I think is really interesting, hasn't been discussed, is tube logistics. And you can look across China, what China's doing with this, specifically companies like JD.com, and the sort of merging together of the physical and the digital world in order to create a sort of unified retail experience. And one of the things they're doing to help supply that is linking together these large-scale fulfillment centres with the smaller urban retail units or urban fulfillment centres themselves, and using tube logistics in order to move those goods underground, obviously using effectively electric carts that move backwards and forwards. Companies outside London, Magway, for example, are looking at exactly this. They're getting huge amounts of funding in order to look at the same thing, being able to have a network effectively of sort of tube logistics that are moving goods between these logistics spaces, and not consuming space on ground, keeping trucks out of the city centres, but actually moving stuff incredibly cheaply, incredibly quickly, but using effectively what was a 18th, 19th century invention, which was sort of pneumatic tubes.
No, very interesting. And I think that repurposing aspect of it is really interesting. We're right up against our time here. So there's a couple of very quick questions that have just come in. As innovation advances so rapidly, what will be the reletability prospects of a long let 10 to 15 year big box logistics unit at expiry, and also what drives renewal rates as opposed to occupiers moving to a new unit? So if anybody wants to pick up those too quickly. Any?
Take that one, Richard. Happy to cover those off, as big box is my thing. The thing about innovation and technology is that tends to affect the tenant fit out inside the property, not actually what we as investors own. The properties, the buildings we own are very, very simple, straightforward, generally rectangular boxes on a good piece of land in a great location that's flexible and able to be used for all sorts of different things. And these buildings suffer very low levels of obsolescence, which is one of the reasons they're good investments. They don't need much capital expenditure. And so if you're investing in that in a simple, straightforward building in a great location, 15 years is actually not that long in the life of a property like this. They can last 30, 40, 50 years in extreme examples. And therefore, as the technology changes, all that happens is what is inside the building changes, but the building itself is still fit for purpose. And in terms of the relatability and turnover of tenants, again, same point. It's all about the quality of the building, the quality of the location, and you will find a tenant.
Okay, great. Very last things. What's the key forward-looking thing that you think everybody should be looking at in terms of trends for investors specifically? Let's start with that, and also any opportunities in the market that you think. Let's start with you, Daniel.
From my perspective, the real drive will be for last mile logistics sites. As a result of the pandemic, and we've talked about the increased e-commerce, I think the key challenge will be getting goods in and out of towns and cities to service the demand, which remains a huge challenge, particularly as we talked about earlier about the competition for development land being allocated for residential use, combined with a huge consumer demand for next day, same day deliveries. Has really exposed the lack of urban logistics sites that there are available, and as I said before, that's why we've seen a huge amount of competition for those sorts of sites.
Okay, good. Nick.
Thank you, Richard. I think final mile is the thing, and I really enjoyed listening to what Sean was just saying then about the tubes and all that sort of thing. I completely agree. I think there's the final mile piece is in a huge state of flux, evolving rapidly, I should say. And I think that Dan's point is correct. There's a real shortage of urban logistics space in city centres, but I think we'll see repurposing of retail space, whether it be car parks, whether it's shopping malls, whether it's just normal high street shops, whether it's fringe of town centre retail warehouses. I think we're going to see huge changes here. Could even be office buildings as well, which are well located, secondary offices. I think that we don't know it yet. Obviously, we're all staring into a crystal ball, but I think that the way we get goods from the factory via a large distribution unit into people's hands at home or work is going to continue to change. And it's going to be very interesting to see how it happens. And I'm afraid I'm not a crystal ball gazer. I don't know how it's going to happen, but I think we've heard some really interesting ideas today about how that is going to happen. And all of what we've heard, I think, is going to play a part in that.
Great, Sean.
For about 8 years now, I've been saying that the future of supply chains is what I call the PAL supply chain. So it's personal, heavily automated, end to end, and local. The local thing, lots of people were skeptical about for a long time. Sort of raised an eyebrow at me when I sort of talk about reshoring and nearshoring. But also, more importantly, I think the movement of goods and services close to where the consumers is. So the previous wave was based around and predicated around the retailer being in control. And they determined when the shops were going to be open, where the shops were going to be located, and the expectation was that the consumer would move to them. I think that's no longer true at all. They're the consumers in control of this now. They, through both omni-channel demand capture and omni-channel logistics, the retailer has to really put the customer at the center of their business model and be able to adapt to where the customer wants goods to be able to actually go, and actually has to provide experiences, not just products and services. So I think we're going to see this ability to sort of localize personalized experience through a vast range of data that's being captured about each individual shopper. and the ability, obviously, to deliver that, cost effectively. It's no good just saying you can deliver anything within 2 hours. You actually have to be able to do it, and you have to be able to do it and make a profit at the end of the day. So I think a lot of companies are going to be looking at, how do we utilize these two new technologies, and how do we use them in such a way that enables us to strategically design a supply chain network that enables us to be able to deliver goods to where the customer wants when they want and make a profit at the end of it.
If there's a lack of product in Western markets, is that going to increase investment volumes and demand in CEE? That's the quick question from there. Mark is not going to be able to answer that in enough detail now, but we do have the CEE Summit coming up in a couple of weeks' time. We'll put the link to that in the chat, and we'll have a whole session on CEE logistics in that one. So, Mark, sorry, go ahead.
Just quickly on CEE, I think already a lot of capital has gone to CEE logistics investments because there's a lot of development going on. Big box, Amazon has built quite a few logistics assets there. So there is product there, and money has gone into CEE, Poland, Czech, etc. So there is and was interest in CEE. Now, maybe thinking about the pockets of the market that I personally find very interesting is logistics has become more about location over the last 5 to 10 years. Specifically thinking about the urban distribution aspect. So in my point of view, a more value-add approach coming from a location angle, really find the strategic best location and take whatever asset is there and repurpose, rebuild it to whatever you need for your modern logistics operation is actually a very interesting investment strategy going forward.
Thanks very much to everybody for joining us. Very interesting session. Thanks very much to all of you for your questions, to all of the speakers for sharing your insights with us. For those who haven't visited so far or are watching this on watching the session on Zoom, do go and have a look at the exhibition, realx.global. Have a look at that. You can indeed visit the CORESTATE stand and many others there. Thanks very much for joining us today. And look forward to seeing you at the next one. And in the meantime, do have a good day. Thanks very much to everybody for joining us. And thank you, speakers.